I'm Dan Fitzpatrick at Stock Market Mentor on Monday, December 3rd. And in this video, we're going to look at Green Mountain Coffee Roasters. This is one that I've talked about before with respect to this volatility squeeze. And so let's go through the typical pattern of these squeezes. First of all, you need the squeeze. And then phase one is the initial move higher. We got that there. Phase two is the pullback to test the breakout. Here, that pullback was successful. You'd put a stop right there. And then finally, phase three, let me zoom in here. Phase three is when the stock rallies back above this point, back above this phase one high. That was $30.14. So we had a big gap here, so that was a heck of a move. If you were in before, then you're happy. But even if you weren't, you could still have bought on this initial move here. The open at 34.55. It's always tough to buy these big gaps, but ultimately it works. You're up about $3 from that opening print, and Green Mountain is still going. Now let's talk about how to trade this. First of all, you have to understand these Bollinger Bands, they're just creatures of statistics. They're supposed to contain like 90 or 91% of all of the closing prices. That's the norm. This is why they expand, by the way. When prices are running away one way or another, Bollinger Bands expand to ultimately like capture or catch those prices. Well, this stock has moved up so strongly that 1, 2, 3, 4 days in a row, Green Mountain is closed above these upper bands. That makes for a move that is really ripe for a pullback or at least a rest. So what I would suggest doing is, if you're long Green Mountain, use yesterday's intraday low, that's 35.69, less than $2, a little bit more than $2 actually, away from this current close. Use that as a basis for stops. If Green Mountain falls a little bit below that, you probably don't want to be long the stock. If you're really aggressive on setting the stops, you can even use the intraday low of 37.12 today as a stop. However, if you do that, if you set your stop that close, frankly, you're going to get stopped out. I'll just tell you, you're going to get stopped out. So if you decide to use the more aggressive stop, why not just take profits and just get out of the trade? Or at least take half of your profits off the table, stay with the other half, and then set your stop below yesterday's, or that's Friday's, intraday low of 35.69. Make it like 35.60, something like that. That way you've locked in some profits on Green Mountain, and you've also locked in a small loss, and that's assuming like you bought here or something. You've locked in a small loss, or you're at least containing your downside on the remaining part of it. So that's how I would trade Green Mountain. Now members, there's a lot of short setups, and so I'm going to talk about those with specificity in tonight's strategy session. So I want you to get over there. Also, to anybody, if you're not a member, check it out. You get a risk-free 30-day trial. And so go over there and do that, and then you can see what I'm talking about in the premium section.